If you ever wondered, isn't a budget the same thing as cash flow? Hmm, you're not alone. Welcome back to the channel. If you're new here, I'm Joe, a licensed certified public accountant with over 10 years experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. Today, we're breaking down the difference between a budget and cash flow, and why understanding both can totally change how you manage your money. So, let's get started. But before we get started, don't forget to hit that subscribe button to the channel and check out the blog site where we post every Monday, Wednesday, and Friday. Let's get into it. Let's first define cash flow and budget in plain English terms. So, let's define our first term, which is what is a budget? Think of a budget as your plan. It's a plan for your income, it's a plan for your expenses. It's what you plan to do for a future period, usually like a month. Maybe you set a weekly budget for I estimate that I'm going to make X amount and I only want to spend X amount. So that the budget is just the plan that you want for some kind of future period. I only want to spend this week on takeout food $20. So that's what the budget is. Think of it as our roadmap to where we want to go with our money. It doesn't mean that we're going to follow that roadmap straight away, but it's a good guide for us to use to understand where our money is, what's coming in, what's going out, and how we're going to navigate traveling. Now, let's look at what is cash flow. Cash flow is what actually happened. It's the real movement of money in and out of your bank account. So if we so when we think about cash flow, we're thinking about the aftermath. We're thinking about what we actually did for that week. Maybe this week we got in late from work every week, so we didn't get a chance to cook every week like we want. So our takeout was a lot higher. We actually spent the money on the takeout. So that's what that difference is going to be. So let's bring it all together and see what both of them do. So when you bring it together, think of them like the weather. The budget is the forecast, and the cash flow is what actually happens. So a lot of times here where I live at in the Northeast, um, the weather will tell us, hey, it is going to snow. Let's say on December 7th, and then come December 7th, we don't get any snow. So they budgeted. Our budget is we think we're gonna anticipate, what we want to spend, how what our goals are for spending, and what our plan is on controlling our spending or bringing in more income. The budget is our plan. And then the cash flow is after we've implemented our plan. So if we go back to our example, say we budgeted to only spend $20 for the week on takeout. And then at the end of the week, we go back and we look, we actually spent $40 on the week. And now we could sort of determine, well, what happened? Why did we go over our budget by $20? Maybe we had anticipated staying out. Didn't anticipate staying at work a little later. Maybe the kids were giving us such a hard time that we just didn't feel like cooking. Maybe you felt sick. Maybe your stove stopped working and you had to buy takeout. So the budget is our plan. It's our roadmap to where we want to go. Our cash flow is what happened after. It's the money that we actually spent, and it's a good tracking tool. Let's take a look at a real example. Alrighty, let's say you're budgeting for the month, and this is what your budget's going to look like. So you're anticipating to receive an income of $3,000, whether that's from your side hustle, from your main job, from whatever other sources you may have, or maybe it's a combination. But you're expecting to bring in at least $3,000 for the month. That's what we're budgeting. So we're going to put that 3,000 up there. Our rent is $1,000. Now that shouldn't really change. Our rent and our mortgage should be a fixed rate, so we already kind of know what we're going to spend there, but we still want to write it down because we want to track everything. You'd be surprised at the hiccups that happen in life, and I'm pretty sure you've experienced some just like the rest of us. So we still want to write it down, even though we know what our fixed rent or mortgage will be. Groceries. Now, groceries, we're anticipating to spend $400 this month just in groceries. So we want to write that down. Now, that could be higher, could be lower, but we'll take a look once we see our cash flow. Next, transportation, how we're getting to and from and getting around, whether it's to work, dropping the kids off, or having our fun activities, whether we're Ubering, driving our own car, or catching public transportation. We're going to anticipate spending $200 in transportation for the month. And then our fun. Remember, we always got to put in some fun. Um, Life is stressful as it is, so we don't want to make it. We want to at least be able to have some kind of fund built into our time. So that's going to be $200. And then we always have to save. So we want to anticipate that we're going to save $300 this month that we're going to tuck away, put it into our savings account, put it under our mattress or wherever we do our savings at. We're anticipating $300. So if we add up all of our expenses, that's going to be, we anticipate to spend $2,100 this month. And we expect to have a remaining amount at the end of the month of $900. So this is our budget. This is our plan. This is what we call the roadmap to where we want to be and where we want to go. But now real life happens to us. Now let's take a look at our actual cash flow. What is our cash flow? So the income is actually 2,800. So it's less than what we anticipated of the $3,000. Let's say you took 2 unpaid days off. You just had to take those 2 days, 2 unpaid days off. It was an unfortunate thing. Kids got sick. You got sick. Had an emergency at the house. We just couldn't make it in. And for whatever reason, we ran out of vacation time or we didn't have any more sick leave. So we had to use unpaid days. So our actual income was $2,800. Our rent stayed the same at $1,000, which we anticipated. That shouldn't have gone up or down. So we netted out there, and then now we're looking at groceries. We actually our actual groceries was $500, and if you remember back to our budget, it was we anticipated to spend $400 on groceries. Maybe inflation kicked in a little bit higher this month. Maybe we had some hostings, or maybe we just didn't budget correctly, the correct amount, or maybe the kids are growing and they're eating a lot more than what you anticipated. I know that happens in my house all the time. You buy bagels today because everyone loves bagels. You buy it next week, you buy it, you double it, and no one's eating the bagels. They're all going to waste. So I know that struggle as a parent. Now, transportation. We anticipated that our budget, our actual cash flow was $300. We had some car repairs. We had some car repairs. We had an additional $100 that we didn't anticipate to spend. So we went over it. We busted the budget. Our budget was for 200. Our actual cash flow was for $300. And then our fund, with all the stressful things going on, our fund came out to $250, which was $50 more than what we had budgeted. But hey, the car broke down, groceries went over, and we didn't make as much income. So we needed that extra $50 in alcohol in order to get by, if you know what I mean. And then for savings, our savings ended up being $100. So we didn't get to save as much as we want due to our transportation and due to our groceries going over by $100 each, which took away $200 from what we planned to save in our budget, which was $300, and it actually ended up being 100. So now our total expenses was $2,150, but our income is also less. So our cash flow shows smaller cushion than what we actually planned for. So that's what that is. Our cash flow, what we actually spent, is a smaller cushion than what we had originally anticipated. Now let's take a look at why the differences matter and how it can impact you. So, why does the difference matter? A budget helps you to set your goals. Whatever that financial goal is for either the year, you can set a budget for the year, you can set a budget for the month, set it for the week, but that is setting your goals for and your expectations of what you expect to bring in and what you expect to spend. So that's what our budget does. It helps keep us grounded and guided during the path of our finances. It's almost like the lantern ahead of us as we're walking through our finances. And now, what is cash flow? Cash flow shows how close or far you are from them. So when we look at our cash flow, we're going to compare that to our budget. It's just like a corporation. I've seen it. It's like I said, I've worked in corporate America. I've been in public accounting, and even in my current role at a local government, we, as an auditor, not only as an auditor but as an accountant, we take a look at what the budget was, and then we look at the cash flow of what actually happened. What was the reality? And you have to treat yourself, even though you may be an individual, treat yourself like you're a business or a corporation, one of these mega large corporations. Figure out what the budget was, what the cash flow is, and don't just figure out what maybe is if you bust it, if you spent more than what you budgeted, don't just look at that. You also want to look at why did we actually maybe why was our budget so under? So let's say for instance your budget was to save $300 for the month, but you actually ended up saving $500 for the month. We want to know why. Maybe we set that budget too low. So maybe we need to up our expectations. So a lot of times when people get into cash flow versus budget and they're looking at, they're only looking at what we overspent. But we also want to look at what did we underspend because maybe there's an opportunity there for us to do something else. So it's going to help us to avoid those surprises. People often think to stick to their budget on paper, but run into problems because they're not watching their real cash flow. Cash flow tells you if you're actually running out of money, even if the budget says you're fine. So it helps with the adjustments and to better control our cash flow and to keep more money ultimately back in our pocket and save up for whatever we want to do, whether it's to go on vacation, whether it's just to have an emergency fund, whatever it may be. That's the biggest thing that we're looking at here and why the differences matter. All right, let's take a look at how our budget and our cash flow work together. What are some of the keys to that? Let's take a look here. I know I keep stressing this, but remember, our budget is our plan and our cash flow is our reality. To succeed financially, you really need them both. Make a budget at the beginning of the month, and it doesn't have to be a monthly budget. You can set a weekly budget, a daily budget, a month, like I said, a monthly budget, a 6 month budget. It really just depends on your goals. A yearly budget if you want to. I have a friend, he actually sets a yearly budget. That's a lot of dedication and commitment. And then you're going to want to track your cash flow during the month. And you don't need anything fancy. You can use Excel, you can use whatever you need to use in order to track that cash flow. And then you're going to adjust your spending or update your plan as needed. It's like planning a trip and checking traffic while driving. You adjust the route if there's any delays. Alrighty, let's take a look at some misconceptions and bust a couple myths about budgeting and cash flow. One of the first common myths is I have to budget so I know where my money goes. Not necessarily. It's not always true that just because you budget, you know where your money goes. It doesn't mean anything unless you track your actual cash flow. So a budget and a plan is good, but if you're not seeing what the actual, it's almost like going to the gym. Like you have this plan where you're going to go in the gym. Monday's going to be chest day. Tuesday I'm going to run. Wednesday's going to be shoulder day. Thursday's another run day, and it's all good until the end of the month. If you're not getting on the scale, how do you know if what you're doing is working? If How do you know what you're doing is actually going toward the plan? So just because you have a budget doesn't necessarily mean that things are working unless you're tracking that cash flow. Another myth is that cash flow is only for businesses. Nope. It's like I told you guys earlier. Individuals and households can have cash flows too. Your paycheck equals your inflow. Your bills and spending equals your outflow. Treat yourself just like one of these mega corporations. Uh, McDonald's, what are some famous places? McDonald's, Amazon, Walmart, Target, all those places are tracking their cash flow. They have a budget and then they track the cash flow to see what do we do right, what do we do wrong, where can we cut spending, and where do we under budget? Like I told you guys, it's not always about over budget, but where do we under budget where we missed opportunities. Another myth is I don't need a budget if I track spending. You need both. One plans your money, the other monitors it. So if you're tracking your spending, what does it mean if you don't have a plan for it? It means absolutely nothing. So we want to actually make sure that we're planning it, which is our budget, and then we want to monitor it, which is our cash flow. Alrighty, let's wrap things up and give our final thoughts. Remember, budget is our plan. It's our roadmap. It helps us to set our financial goals of what we want to do. Our cash flow is the reality of things. It's what we actually did. It's even though we may have had a plan and a goal to do X, cash flow shows us what Y actually is done. We need both to take control of our finances. No matter how simple or complex your income and expenses are, both are very important and you can't have one without the other. If this video helped you, give it a like and let me know in the comments what you want to learn next. And I'll see you guys next week to talk about creating your financial command center.